Feel free to start asking questions anytime. We'll kind of I think in general, we'll look to do these for about 30 to 45 minutes each time. And if there's a flood of questions, we can try to, stretch it out a little bit longer, but we'll try to keep them kind of short so that everyone can also, when they think about joining these, they know it's like a half an hour commitment, not like an hour and a half commitment. Great. So, um, quick disclaimers. This is not solicitation to buy or sell any security ever. This is not advice. You should read the characteristics and risks of standardized options. The results here are provided for general information purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investment in light of your financial condition. I'm Jason Hitchings. I'm the CTO of Capital Market Labs. The agenda today is pretty simple. We placed 2 trades in the last few weeks, a CMG trade and a BBW trade. Just going to kind of do a quick update on those. I'm actually going to close the CMG trade. I just finished closing it about 15, 20 minutes ago. Kind of go back and forth between trying to use the complex order book to get like a really great fill versus trying to do it via individual legs. And then we did a quick check-in on the BBW. We had a few questions about when does it make sense to sell a higher strike. We did a trade in BBW last week where the kind of at the money-ish strike was trading for like 140 and the out of the money strike was trading for only, the midpoint was like 10 cents. We did it for 10 cents. We had a few questions about, hey, does that make sense? When does it make sense to trade, to kind of give away some of the upside, etc. So I kind of did a deep dive into that, just, looking at a few scenarios about what, when that hurts us, when it helps us. Whether one does that or not is totally a matter of taste and opinion, but I just thought I'd look at that a little more since we had a few questions. Okay, so I think, yeah, maybe I could look at my trade log, but we started with this Chipotle long call. The stock went up. There was also a trigger on the same day for a Chipotle diagonal. So when Chipotle started going up, I kind of hedged and I turned the long call into a diagonal since they were both good triggers. It's kind of like got a better fill on my diagonal than I would have, been able to because I was able to sell the short leg at a higher price than I would have a couple days before. So I didn't mind doing that. So as of last Thursday, this was our position. The position that I'm trading in order to kind of show some capabilities of TradeMachine and also to kind of show how to enter tickets into Thinkorswim. Again, I'm never suggesting or recommending to do any of these trades. These are just trades that I'm choosing to do for demonstration purposes. Okay, so we had this 2380 call expiring February 23, and then I, after 2 days, shorted this February 2 call at the 390 strike. So this was where we were last Thursday. The market has rallied, everything is rallying, and so both the short and the long strike have gone up, substantially. It's showing a net profit of like 3,000. The long call strategy for the pre-earnings long call would have a stop and limit at 40%. So this would have, hit that stop and limit. That diagonal strategy doesn't. Diagonal strategy just runs until the front month expires. And so I could let this go a few more days until the front month expires. It's kind of a matter of taste. I got some big things going on in my life, so I'm not gonna kind of let the position. I don't want to have to think about open positions. But just thinking it through, so how much? These are both quite deep in the money now. Chipotle's up at 2,400. So even the short strike is in $10, $16 in the money. So the deltas were actually almost delta neutral on this position, surprisingly, because they're both so in the money that the deltas are very high for both of them. So the stock moving up and down a little bit right now doesn't hurt me too much, but obviously if it moves substantially down, that picture will change. Um, so yeah, if we just let this thing, if we play the diagonal out like we would normally expect and let it run till February 2nd, like how much more value could we potentially capture? So these markets aren't wide, but they're wide enough it's not immediately obvious without doing a little mental arithmetic in terms of what the midpoint is. So 29.35 is where the midpoint is at this point in time. That leaves an intrinsic value in the option of about $16 because stock's at 24.06. It very conveniently had no pennies in it, so it makes that a nice round number. So $16 of intrinsic value, the midpoint's at 29.35, so that means the extrinsic value is 13.35. So the time value in this option is 13.35. So if nothing were to change for the next, 3 days or so, this time value will go to zero, and what you'll be left with is the intrinsic value, and the option will be worth the $16 if stock stayed exactly where it is, which of course it won't. So looking at the theta is saying, okay, this position is the overall position is decreasing in value by $359 a day, and since we're short, our value is increasing by that much per day. So if you multiply that out by 3 days, it would predict that it's going to lose 1,077 over the course of the next 3 days, but we can see mathematically it would lose 1,335. And the reason there's a difference is because there's time decay accelerates going into expiration. So as options get very close to expiration, the time value kind of goes up in a puff of smoke, and things that are further out don't decay as quickly. So it's not that we would gain $1,335 by waiting if stock didn't move, because both options are changing. This option that's expiring sooner is going to be decaying faster, but both options are going to be losing value. And so the option that we're long that's losing value is going to lose about 200 a day right now. So approximating, we know that this number is actually a little, you can't use this number for 3 days in a row. This number actually goes up over time because we don't lose 1,000. That option doesn't lose 1,077, it loses 1335. But this is kind of approximate. This is guesstimating like 450 would be if we stayed in for a few days. It's probably, more like 550 or something like that. To stay in until February 2nd if the stock doesn't move around too much. So that was just kind of like a little scenario analysis if life were a little more normal, to consider whether, where I could think the stock might go up or down. But yeah, we're having a baby soon, and so I'm just going to exit this position. And so I start by going to my positions and I click both, and then I click close selected. That brings up this kind of, technically it's called the complex order book, but you can just trade the spread directly. It shows the bid and the ask for the entire position. And, it's always hard to know in the kind of dark pools and people sitting out there waiting for a trade to come through, that kind of stuff, like what the real fill price might be. So I tend to be, kind of aggressive. They can start to ding you if you cancel a ton of trades. You can get little charges, but they made those rules a lot more flexible. It used to cost you a lot to cancel a lot of trades, but they made that stuff a lot more flexible than it used to be. So yeah, it was saying that I would close this position. My position is net long, and so a higher price means I'm cashing out of my position, so a higher price is better. So I pushed this up to 80, not expecting I would get it. I reviewed the trade. I let it sit there at 80. It shows that it's trying to exit these positions. I click on the little working thing. This is what's happening. It's trying to get out of here for 80. It's well above midpoint. I let it sit for a while. Nothing's happening. I just edit it. I kind of bump it back down to 79 and, play with it again. I still don't get filled at 79. So at this point, I'm like, okay, well, why don't I try to just exit out one leg at a time? So I cancel the whole complex order and I try to just sell one leg. So I always, if I have a spread, I always close the short position first. It's just, doesn't blow up your buying power and all that kind of stuff. Um, just a note, when I click this, it doesn't, I'm clicking to buy this to close it, but when I click it, it enters 10 contracts. So it doesn't enter, unlike some other brokerage platforms, it doesn't enter the number of contracts you have, it enters the default amount. So the safer way to do it is to go to your positions and just check the position that you have open and click close selected. Then it'll choose the right number. Yeah, so I play around with this a little bit. I also try to get, a great fill. I try to close it for less than, the midpoint price. Once I put that bid in, once I'm saying I want to buy it, then it changes the market and I see the midpoint jumps up from 29.15 to 30.75. That's expected. It sits there. I don't get filled. I kind of tick it up, get to, 29.50. I get a little bit above midpoint and I still don't get filled. So I just go back to the complex order book and I put this thing in at 77 and I'm saying, okay, I'm willing to close it for a little bit less than the midpoint value. That's usually relatively safe on things that are fairly liquid. So I just go in here and say, okay, I'm losing 80 cents. It's nothing relative to how the trade is done. And yeah, I just put in the complex order book, it fills, and I just log my trade. I just took a second to like show my spreadsheet because we're big believers in having a plan and logging your trades and seeing how things do over time. Even for newer traders to go through this process, even if you're doing a paper trading account, and just figure out, hey, what strategies are really working for me? I did 5 faded dips. How have they done overall? When did I exit? Did I exit at the right time? Did I hit my limits? All that kind of stuff. So we're big believers in keeping good track of your trades, and then you can review and adjust as you need it. And also when you have a plan to exit, it just kind of takes a lot of the emotion out of it. So that kind of wraps up that Chipotle trade. It did great. I mean, it's great being long options when the market is rallying as strongly as it is. I
Jason,
thought it. Yep.
I'm sorry. Before you go on to the BBW trade,
Uh-huh.
um, in community, we talk about diagonals a lot,
Yeah.
and especially for the pre-earnings ones. My personal strategy is as the short call gets approached and passed, um, I perceive the risk that the stock is going to keep going in that direction, and the delta of my short option is going to overtake and surpass the delta of my long option as it keeps going up because of the difference in gamma. And I will do one of two. So I make the fundamental decision. Do I want to just take my profit as the short option has become in the money, just take the trade off,
Right.
or do I want to roll that short call in the shorter expiration to the long call's expiration and make a long call spread out of it?
Right. Yeah.
And
And where
then
do
and
you
then and then I'm protected as far as
the delta
uh
running away from you? Yeah.
exactly. And
Hmm.
I still leave the potential open for more profits if it keeps going up. And theta can only help me. And I'll always close before the earnings event.
Yeah. Yeah. I mean, the interesting thing about when you roll to the back month, it can constrain you. Like oftentimes, I mean, so my personal experience just with trading spreads when you have the same expiration like that is oftentimes you have what feels like a big theoretical gain because you see like $10 of intrinsic, but now the out of the money option is closer. I mean, the higher strike is now closer to being at the money, and so it has a little more time value wrapped in it. And so, my that takes some patience at times because you might see your profit. Maybe it's a $10 spread, and you see a profit of $7. You know, and you feel like had that front month option expired, you would have realized the profit early. Been able to kind of like exit the position or take the profit. But yeah, and then certainly these are good scenarios to have because now you're talking about like, yeah, you have a nice profit in your position. It hasn't quite reached the theoretical, and when are you going to exit out of it? But yeah, that sounds like that sounds like a um, solid way to manage your delta risk on this position. Yeah, it took me just a quick second to catch up to where you were mentally with that front month option, but yeah, that's a sound approach. Um, Looking at this BBW trade, um, yeah, this was just we kind of did 10 of these long calls. Um, when it came time for the short option, it was basically I was just following the strategy as it was laid out. It was, you're not collecting a lot. I think the lower strike was, you know, yeah, $1.37 or something like that. I think we had filled, yeah, slightly better. Um, so yeah, it was only collecting about 8%, 10% of the value of that uh long position. And so then the question became, um, yeah, is that a worthwhile trade to do? So I was just more or less following the uh just the strategy the way it was laid out, but just wanted to look at the kind of different scenarios in that a little bit more. Um, so yeah, we ended up with this. This is our, the position as it happened now. Oh, this is where it was originally. We've got filled at 10 cents. Um, a few days later, this thing is, I think the mark is at 15, so it's, short legs down $50 and the long leg is up, it's doing nicely. So just looking at that real quick. Obviously, I mean, so the stock at the time was trading a little bit below. I think it was around 22 or a little bit below. And maybe on the previous slide we can actually see. No, I don't have it there. So the stock would have to be moving from like 22-ish up through 25 and a little bit past it before we start getting hurt by that short leg in terms of if we wait uh, for the front month to expire and when we exit. And so that's it's a relatively large move. So you're talking about a $2.50 move on a stock that's at, 22 or something like that. So it might be a 12% move or something like that upwards in about a 2-week time frame. So this is the 3-month chart. And so we were sitting around here around 22. And so the question is like, what are the chances that the stock's going to go above 25 or 25.11 in the next, between now and February 16th? So in about 2 weeks. It'd be a substantial move, but it's certainly a possible move. And if the stock pops to, 27 or $28, you're gonna wish you weren't short, didn't try to pick up that extra $100. So looking at the kind of little P&L charts that they give you inside, you can look at the individual options, and I'm just clicking the long and saying, okay, yeah, so this is your theoretical P&L, and I boxed out in the blue area, the kind of up above the 25.11, 25.13 price. This is like the theoretical value you wouldn't capture, and this is the line on this chart. And it's kind of nice because as you move one line, the other one adjusts on the chart within Thinkorswim. Yeah, and so the question is just, how likely are we to pop up above, that level? If we do, then there's a huge amount of upside. So this is more like I think 12 or 13%. Another question is, if you started getting up here, would you actually, if you're just long the call and stock got up into this like 26, 27 level, like, are you actually going to try to hold it into these, like until the stock goes to 30? Like it's been a long time since the stock's been at 30. So when would you realistically be exiting this position? Because if you'd be exiting this position when the stock goes up to 23, 24, um, then all this like theoretical upside up here is not really part of your trading plan, unless it just gapped up overnight from like a buyout offer or something like that, and those things happen. So now when we look at the position with both, uh, both positions checked. So looking at the long and the short call. And I think this is actually what Max is talking about here, because this front month option, when it expires sooner, like your position actually can start to go down a little bit in value over time, because the delta of that higher strike option, which is um, closer to expiration, the delta can actually reach 100 faster, in the sense that if you think about delta as a chance of it finishing in the money, well, if a stock is only 5 cents or 10 cents in the money, even an hour away from expiration, that's going to probably look pretty close to 100 delta. And so even if you have a strike that's much lower and much further out, the delta is not going to be 100 on it, because there's still chance for stock to get down to that level. So as the stock starts, you can see the P&L, once the stock starts moving up here, then that higher strike option is actually, as the stock goes up, it's actually hurting you a little bit, you know, not massively, but it does hurt you a little bit. So it's a good reference point. It was a good point that that Max brought up. Yeah. So then the question is, so once stock starts to get up into this like 25 plus zone, at that point the lower strike option is going to have like 250 of intrinsic. About a third of the time would have passed. I'm just approximating, saying that there's about $1 of premium left in this thing, and the overall position is worth like $3.50. And so that's a substantial gain from your like original call being worth 143. So to me, if the stocks ends up rising substantially and it's a few days before expiration, I don't mind. I mean, that out of the money option will have hurt my P&L a little bit, but not a lot. And I'm unlikely to hold this thing much above 25. Now, the scenario where it moves very quickly, is where it can, frustrate you more. So I put the scenario in this P&L thing out to the 5th of February. This thing expires on the 16th. And so if you look at this dotted line here, this is what the position would be worth on that day versus the kind of theoretical, value of the position. And you see a difference here, because right at 25, that eventually that out of the money option is going to expire and become worthless, and you're going to reach your max profit. But if it happens sooner, then there's a not insignificant difference here in your P&L. So this might be around 1,300. This might be around 1,550 or 1,600 or something like that. Yeah, so you'd still have a nice profit, but not the same profit that you would have had, had you either waited till expiration or had you not ever sold that short call to start with. So for me, I don't have any hard and fast rules about I don't sell options for a nickel or something like that, or a dime, because to me it's about this scenario. So if I'm happy to sell something for a dime if it's way out of the money. You obviously don't want to crush the potential upside of your position by selling a option for very little that's very tight to your strike. So we dropped the cost of our position by $100 by selling that thing. The other little benefit is that instead of the position costing us $20 a day to own, it costs us more like $5 or $6 a day to own, as we're offsetting some of that decay. So even that little 10-cent option does have enough decay built into it that it does offset the more valuable option sum. But in short, I think it's definitely just a complete matter of taste. People had asked like, well, when would you sell something out of the money? I think just kind of playing through the scenario of how far it would go up or down, where it hurts you, where it helps you. You can kind of walk through it, figure out your own, taste and style. But yeah, I just wanted to look at a few of those scenarios since we had a few questions about it, and then we can dive into the Q&A.
Okay. While people are entering their questions, I have one. While you are controlling the video, would you look at the Today tab for a second? Thank you. We want to look at the easiest one to look at for this potential issue is MGM,
Okay.
which is a 14-day pre-earning long call diagonal.
Second here.
Okay. We're seeing your Q&A screen.
Yeah, understood. Yeah, I
Okay.
think this thing is just the cache is a little old or something. Yeah, so can you I'll pull that thing up in just a second, but can you so what's
So,
the issue you're
so
seeing?
the MGM trade alert hit today.
Okay.
Um, and
This pre-earnings 14 day,
right. So you see it says 5-1,
right?
5 wins, 1 loss.
Uh-huh.
Now click on it and go to the back test. Make sure your end date is correct for today.
Yeah. And you're talking about the 5 and 2.
Yes.
Yeah, so the
Go ahead.
difference is that this trade is now showing the current day as
Right.
well,
Right.
which
And it,
which on that his back test was not. So it's I mean the P&L is basically flat on the day. Um, when it tries to score it as a win or a loss, it can look at the commission or whatever, and if the commission is 25 cents, it'll show it as a mild loss.
right.
Um, yeah, so
Oh,
the basically this for platinum users right now. So non-platinum users aren't seeing this yet. Um, we're going to roll out this triggered thing, but the show options to get to pull in those live options is new. Um, so let's out of curiosity, well, that'll kind of change the effect a little bit. Yeah, but the today tab is running the back test as of the last time that back test was completed. And this back test completed today. So the end date is today. But currently the today tab version, oftentimes these scans will run in the morning even before the market is open. And so it's not pulling in the live option data intraday when it's factoring in this wins and losses on the today tab.
hmm.
Whereas for platinum users, these back tests now are like, so before last week, you would never have seen the 30 January, you would never see today's options. You could see it in stock because we had live stock data, but only now do
Right.
we start having live option data. And so, yeah, you're going to see a win or a loss kind of come in on that last day of trading that was never there before. And so,
Right. So
um,
in the old days, we wouldn't see this trade until
until the
January
following day.
31st.
Exactly.
And only if at the end of the day, 3:45 New York time, um, it still held all its technical open conditions.
Exactly.
But now
It,
we're seeing it the same day.
yeah, now it's actually pulling in the trade the same day for the live options data.
Right.
Um, for platinum users. And again, we're going to kind of calibrate and see how much, what it's like hitting that live options data is pretty expensive. And so we're trying to calibrate to see if this is getting rolled out to everyone or just for platinum users or that kind of thing. So this is a very new feature and it's actually pulling in the live option. So yeah, it's going to show generally it generally what's actually going to do is like show you a loss because it's going to be pulling in a price and it's going to say, hey, we opened this thing for this price for 155 at, and 48 cents. The price hasn't changed. And so it's still showing the same price. And so the only thing that can do, it can either be completely neutral or it can be having paid the commission. And even with the commissions more or less turned off, it's still, if it's still kind of like taking that into the loss category. Um, so this is very new and I get that long term, that's probably going to cause people a little bit of confusion or headache. And so, um, yeah, we can figure out about how to represent that in a way that it doesn't cause confusion, or just to have a special little rule there to say don't count as a
Don't count
as a
today's.
loss if you open and close the same day or you open
Right.
today with a mark. Yeah, you
Okay.
could have seen the same kind of behavior before with stock. It looks like maybe the stock is it seems like the options that are break even are getting shown as a loss, unlike the stock. Basically, we accounted for that for stock. So if you open and close at the exact same price, it's not showing the loss there. So yeah, it's a little remnant of that new feature for new users. But yeah, that's something we can certainly get
Okay.
taken care of.
Yeah. There was another example yesterday, but we don't have to go through that one.
Yeah, it will always be the same thing with with the live options thing. I've noticed that myself. Like the live options just show up in a different way, and they're getting tracked that same day as a loss, even though it's not an actual loss.
Okay. All right. Very quickly, we have at least 7 minutes. Um, Blessings and congratulations to you and your family, Jason.
Thank you very much.
Um,
Yeah, wish us luck. We still got a few more days until we're there, but
yeah, yeah. Uh, these prices seem different than on Trade Machine. Is it a different trade? I assume you pulled those prices whenever you built those slides, or
oh yeah, I mean that's from this
yes,
morning.
yeah,
So it
okay,
was a couple hours ago. The markets just moved. That wasn't
great,
those weren't live. I just made slides a couple hours ago. If you're talking about
great,
the Chipotle trade.
right, great trade. First time here, welcome. Um, like this review, it will help to get in a similar situation. Enjoy the time with your new baby. God bless.
Thank you very much.
Jason, I'm a platinum user. Will this feature be available by weekend? If
You
you're a
should see it now. Mhm.
yeah, if you're a platinum user, you should see it now.
If you don't,
If you
please
do,
email support@cmlviz.com.
thank you. All right. Now I'm back to the chat. So typically on alerts, do you go a month out? I think that when you look at trades on the Today tab, um, the different strategies may have a different DTE, days to expiration. Some will be 30 days, some will be 14 days. There's a whole bunch of custom strategies that, there may be it might be a diagonal that's long. The long call is 28 days and the short call is 14 days. So you really have to look at the back test to see what DTE is involved with a specific strategy. They don't necessarily all are 30 days. That's not the case.
Yeah. So for instance, like, I mean, just conceptually, it sounds like that might be a newer user, so welcome. Or at least just kind of diving in deeper into Trade Machine than previously. So yeah, the on the Today tab, these are a bunch of different strategies, 13 or so different strategies that we've created over time, and they each have different scenarios in which they become active. So for instance, this pre-earning 7-day call, and you can see a whole video about it if you click that little question mark.
Okay. I
But
have a,
I was
I'm
just gonna
sorry.
finish answering that. So this particular strategy would trigger 7 days before the earnings event. So we can see the earnings events on the 6th of February, and then this technical condition would also have to be true. So if you add an alert, it's going to try to mimic those things. So it's going to say 7 days before the earnings, if this condition is true, where stock is above the 50-day moving average, then send me an alert. So the Today tab is essentially the same basic type of alerting mechanism. It's just that we've subscribed to all of the possible trades, all the possible tickers for these different strategies, in a sense. Yeah, but each one has its own, unique set of conditions. It could be a 7-day trade or a 14-day trade or a 30-day trade, or I think the MACD it's a diagonal, but it's a 30-day, 60-day diagonal, I believe, if I'm remembering correctly.
Right,
So,
right,
yeah, it's all if you click the strategy and you open one up, then you can, really get into the details about exactly what it's doing. If it's a custom strategy, if you click edit, you can dive in here and see the details. So this would be long, a 60-day, short, the 30-day. And you can look at the conditions for when to trade it, if there's earning conditions, etc. Okay,
okay.
so
All right. So we got a okay. Thanks a lot, Jason. Yes, I am a new user, started last week.
Great, welcome.
All right. So I have a smaller account. I try to find trades that have lower risk and option prices. Maybe a bad decision on my part. Is there an easy way to find trades with smaller risk amounts? So I would suggest number one, the underlying stock price. You probably want something that's anywhere from $20 to $60, $75 rather than a $250 or $500 stock. That'll limit your risk just because of the underlying price. Secondly, if you do things as a spread rather than just an outright long or short call or put, that'll also reduce your risk and your buying power requirement that your trading platform is gonna require for you putting on a trade.
Yeah, absolutely.
Okay.
And if you're
Uh,
trading a spread, then yeah, the distance between the spread. If you do a single contract, then the difference between the strikes times 100 is, you know, I mean, like for instance, if you trade a short put spread, and if it they're no matter what the stock price is, but if they're $5 wide and you trade a single contract, then at the end of the day, your max loss is going to be $500 minus the cost to put it on. That's not nothing, but if you can do a dollar wide spread and a lot of stocks and that kind of stuff. So yeah,
yeah, yeah. I was just thinking more along the lines of a short to 40 delta, long to 30 delta. If it's a $500 stock,
yeah,
it's going to be quite
yeah,
expensive.
yeah, for sure.
All right. Confused. Trade signals use the 200-day SMA and the 10-day SMA, and the chart shows 200 EMA and 10 EMA. They are different. HES trade example.
So I see HES is by the dip.
Yeah,
There's a couple
I
HESs though.
think there's a
So each one of these. Okay, so I think these are the two on this page right now. So there's a buy the dip and a fade the dip.
right.
Do you have a guess about which one he might be talking about?
He doesn't say. They both use the same technical open conditions, right? It's just a question of one buys a call and the other sells a put
So
spread.
yeah. So we'll click the fade the dip here. It's got a nice 8 and O. That's probably was looking pretty interesting. So each of these strategies has different technical and earnings conditions that cause them to trigger. So each one of these is different. When you click one, it will open it up, the trade as is today. It's saying that the technical conditions that caused it to trigger earlier are no longer active. So this is something that Platinum members see, and soon everyone will see this piece. So
Yeah,
it's saying the technical conditions are that the stock has to be above the 200-day moving average right now.
right. SMA.
Yeah, the simple moving average. And that yesterday it had to be below the simple moving average. Also, that the stock needs to be over the 10-day exponential moving
EMA.
average. And
Right.
also the RSI 20 days needs to be below 70. So we're definitely below 70 on the RSI. So what I'm going to do
Right.
is I scroll down to the very bottom, I'm sliding over, and then I'm looking at these, technicals. Oh, this one is, yeah, that I'm going to update the end date to make sure that we're getting the most recent data, because that's a little trick of being a new user, is like when you click on some of these strategies, it's showing you the result as it was last run, but you want to update it to see things as of today.
Right.
Now, the trigger happened today, but the saved back test happened as of the last time we ran the saved back test. So now I'm hovering over here and looking at the RSI. It's still below 70. I think I can actually move this line. Yeah, I can actually move this line. I don't know if anyone knows that, but um, and then it's saying that we needed to be under
I think
the
I think the question is the graph is using the 200 EMA and the back test is looking for the 200 SMA. So,
This chart should be for the 200-day moving average. This should be the simple moving average.
right. So when you highlight the last day or any day, does it, I can't read your legend. Okay. Is it saying SMA 200?
It says this specific one says MA 200, but that by the default moving average is if it's 50 or above, it's a simple moving average.
Okay. All
And if
right.
it's 49 or below, it's the EMA. So yeah, it just says moving average 200-day, but that is the simple moving average.
Okay. So there is no conflict there.
No, it's just a matter of trying to, yeah, explain the details. Yeah, but so these are simple moving averages. It's combination of simple and exponential. If you see a little difference, if you look at a different trading platform and you say like, hey, your simple moving average doesn't look exactly the same as Thinkorswim, a lot of those places, for whatever reason, don't take out the dividends from their stock prices when they calculate moving averages. And I've demonstrated it time and time again, and it's pretty baffling to me. You basically want to back adjust the stock prices because you don't want a dividend to look like a technical failure or something. If they pay a big dividend and the stock drops, that doesn't mean it's oversold, um, in our view. So, but a lot of platforms, I don't know if a lot of people expect to see it that way, but a lot of platforms leave the dividends in when they calculate their technicals. We think it's a big mistake. So if you see any differences between our moving averages and other platforms, that's likely the cause.
Okay. Very quickly, um, are there plans for Trade Machine to have the crypto ETFs available for back testing?
Um, the U.S. listed new crypto ETFs, yes, absolutely.
Okay.
I mean, those should just be included in like every ETF and all the main indices, that kind of stuff that are traded on major U.S. exchanges should automatically um, be included. Um, we did have some tests actually trade to actually be able to test trading the stock like Bitcoin as a stock back test directly. We had some kind of like tests and experiments in there for that. So at some point we may include like the actual historical prices of crypto just as to trade the stock on. But yes, all the major like US listed ETFs, that kind of stuff should be in there. And it might take a few days or something like that before the data flows through, but it should be there.
Okay. Last two quick questions. Does the 1 by 3 by 2, long one, short three, long two, that'll be on the like
Yeah, if you do a safe back test, yeah.
yeah. Spread the sell off, you got it. But it's a simple question. Will the margin requirement, how does it compare to just being a short a put spread or a straight put? And it's really going to depend on the um on the specifics of the trade and the options that you end up using. Uh, the risk in the 1 by 3 by 2 comes from the two put spreads that are short 25 delta, long the 10 delta. And it gets minimized slightly by the fact that you're long 137.25 delta put spread. But in general, it's a bigger risk trade as far as buying power goes than just being short a put spread, one put spread. All right. And the other question is it always best to execute on recommendations from the Today tab in the last 15 minutes of the day? I usually execute within the last half hour just to give myself enough time if I'm working on more than one trade. But this is a Trade Machine uses daily data. The data is gathered for the back test at about 3:45 in the afternoon, New York time. So yeah, you want to make sure that all the conditions are holding near the end of the day, but you want to leave yourself enough time to execute a good trade.
Yep,
Anything,
exactly.
anything, anything you'd like to add, Jason?
Nope.
All right. So everybody's wishing you well
Thank you, everybody.
and enjoy. Is the paternity leave at CML like 6 months? Well, we're not going to see you for 6 months or what?
No, no, we don't have official paternity leave. I'm just taking a few weeks off.
All right.
Yeah, I might, I might hop onto one. We'll see. We'll see.
All right.
Every baby's a
You,
little different, so it could get crazy or it could be smooth. So we'll see how it goes.
you enjoy yourself.
All right, sounds good.
All
All right,
right.
everybody.
Thank you, everybody.
Likewise, thanks everyone for being here.
Seeing community. See you, Jason.
All right, see you, Max.